Greetings, this is Jeffrey Scott, and I'd like to introduce you to a new tool that I have created with Praveen called Market MRI Pro. This will be an introduction to some of the capabilities of what we're bringing to market. It is really a tool that has been designed after 30 years of trading, of things that work for me. We'll continue to be adding additional features, but I think the feature set we have today, bar none, is a great tool for swing trading. Anything I talk about in this program or others is always for education. If I talk about specific stocks, it's about education only. I'm a doctor, not a broker. I'm independent. Praveen and I have a great relationship, and we'll bring this product to market. I have products in WealthCharts. I have product coming out in Metastock. I've got stuff in TradingView, Tradestation. All the tools are different. If somebody asks me which kit I like my best or which tool I like the best, I ask them it's the same as asking me which grand kit. I like them all. I think this tool offers a comprehensive approach in a single package. Trading involves risk. You are solely responsible for any investment decisions you make. If you like the videos and you want a sense of how I look at the market, I do for a website called stocksanddocs.com. I use WealthCharts for this one. They're the ones that maintain the website. But a lot of people ask me questions. How well does this work? Do you have winners, losers? And what I recommend you take a look at the site and go back a month or two and look at some of my comments and stocks that I picked. I am a physician. I'm a medical oncologist, which is a cancer doc. I'm board certified in internal medicine and oncology. I've been trading or in the markets and whatever type of investing I'm doing since the 90s. I quit practicing in 2001. I've had multiple healthcare startups that I've sold to public companies. And because of my rather intense day jobs, I've been, out of necessity, developed a style of trading that can be implemented, even if not able to be at the screen all day. And I've been teaching folks how to trade for over 20 years, whether it's by my YouTube videos. Just look me up, Jeffrey Scott Stocks on YouTube, live seminars a couple times a year, and individual mentoring. For those that wonder if I'm still active in medicine or not, I'm very proud of this. I actually published something last year, you can see right here in this, about quality in cancer care that made it to the best of the Journal of Clinical Oncology annual meeting editions. That was a pretty big deal. Pretty proud of it. One of the philosophies of how I approach teaching people and my tools is you need to be your own trading guru. Here's my future guru watching. You can probably tell where I went to school, Michigan game together. And I met this smart guy named Ian Woodward in the 90s. And Ian, in a British accent, which I won't try and duplicate, would say, I'm not a guru. I'll teach you to become your own guru. I've explored multiple educators, software programs, books, seminars, and my trading styles result of what I've learned from nearly 30 days in the markets. That last comment had to do with the WealthCharts group. But for example, Rob Hoffman, who is the proprietor of WealthCharts, Become Better Trader, I've known him since 2011. So I've really synthesized a lot of tools, a lot of ideas, and a lot of learnings to come up with how I trade. I am a top-down trader, and I'm going to show you why in the next slide or two. I'm a swing to position trader. I don't buy it and forget it. But I also am not a moment trader where I try and day trade. I think the biggest money is made in the market by holding strong stocks for a long time. Because I'm not a day trader, I use daily and weekly charts. I use indicators and scans to help me find setups. I trade equities and equity options. And when I trade, my A trade is a stock in a longer-term uptrend if I want to go long, longer-term downtrend if I want to go short. I look for pullback to support or retracement to resistance. And then I buy off of momentum off that support or resistance. I have a rules-based position sizing and stop management, and positive seasonality is always a plus. I'm going to show you how, using these tools, I can do it in 30 minutes or less. And my basic trading approach has not changed in 30 years. New tools like Market MRI Pro have shortened the time I need to invest each night. That gives me more time for what matters. Now, I still work full time. My passion is the University of Michigan. Here I am with Sharon Moore, the current coach after Harbaugh went to the pros. I adore my grandkids. I love my wife, and I love my boat. And by finding tools that allow me to trade and identify market conditions and stocks that I'm interested in, I'm able to do both. Talk for a second about top-down investing. I like to buy in the leading sectors and industry groups, and I like to buy when the market is doing well. And the reason is this. Why top-down? I was part of a group. I only got to go rarely, but they would meet every month with Ian, and they would pick the best stocks in the market right then. And then somebody kept track, and then retrospectively they looked back, and what did they find? They found that in a strong market, good stock picking could double in 20 days, which is about a month of trading. In a bad market, didn't matter, the same stock pickers did poorly. So the first lesson here is when the wind's at your back, attack. In a strong market, go. But in a weak market, be careful. And the other message here is when you looked over the next month, you revert to the mean, and those big gains came back. So a lot of times people wonder why I take half off after a big move. Because I want to book that because I know historically there's a good chance that we're going to revert back to where we started. Now that doesn't work in a bear market. So if you're in a weak market and you lose money, take your positions off, because if you keep holding them, you're going to lose more money. So that's why I do top down. And thank you for joining today. Let me go show you about the tool that Praveen and I put together. My ideas, Praveen's ideas, and Praveen's sweat and tears. Let's give you an intro to Market MRI Pro. When you boot up, you're going to see this picture. Now, this has a number of features on this, and I'm going to dive down. We have looked at a number of different basic watch lists. Now, I have the JAS watch list, which basically takes the entire market and filters it on price and volume, and I get a little bit over 3,300 stocks. That's where I do most of my fishing from. For those that want weeklies or specific indices, if you're looking for just ETFs, you can filter based upon those criteria. The main menu here is called the impulse indicator, and I will teach you through subsequent videos the various signals that I'm looking for. Now, if we look at a stock that's been a winner and trending, let's look at NVIDIA. So we're going to go into the type in ticker and type NVDA. And we're going to click on NVIDIA. So I want to be buying here. I want to buy this pullback and breakout. And you'll notice these little red dots, which are bearish, and blue dots, which are bullish. You'll notice that back here on this breakout at $80 a share, you saw a full line of it. You saw the max number of dots. So these dots represent momentum, breakout, volume, gap, and two specific buy-sell signals that I use. And I like to scan the market to look for stocks that are getting ready to break out. All right. And these are the things that I like to purchase. So what we have here is a list of stocks, a measurement of the up signals versus down. So I don't know much about GWW. I think that's Granger. And if we look at Granger, you could see big run up, pullback, and a breakout. Now, has this gone too far? I have a thing called the high-low jump, which is a measurement of extension. As long as it's below 95, it's not too far. Now, we know this is likely going to pull back before it goes further, but I might want to put this on a watch list of something that I might want to later on look at again. So I can build my watch list as I go. APPS is a cheap stock, but you'll see the same interesting pattern. Uptrend, pullback, and a nice breakout here. And notice the yellow bar here is a squeeze, and it's got momentum, breakout, and volume, and both my other signals gave a buy. So I look at who's got a number of signals. I have different ways of ranking them, which I'll educate you. Relative volume, looking for volume thrusts. And then I look at price versus, I look at the on-balance volume versus a moving average. If it's green, the OBV is above the moving average, and the number tells you how many days it crossed. I look at relative strength versus the spider versus the moving average. Is it above it or below, and how many days did it cross? And you could see the various relative strength calculations that we have as well. So I use this to filter, and I typically filter on ups and downs. Now, the other thing that we can do is I've got some predefined patterns here that I will educate you on, but these are patterns of stocks that are likely to be big movers. So these are stocks I just look for that are two bars in a row with good momentum. So here is a big run-up, sideways move, and a breakout. And I've learned over a time of trading that when I get these double blue dots for momentum, that something is going on with the stock. Look at what happened here. Yes, the second dot came in after a big gap up. The first dot came in before. And notice how much further the stock ran. So there are a number of built-in scans through this drop-down bar that allow me to do additional filtering. Now, I started by talking about being a top-down investor. And the reason why being a top-down investor is important to me is because how the market is behaving overall is going to tell me what I need to be doing in the market. So let me just click that. When you check off, then you hit the pound signal. It will show up in your My List. I'll come back to that later. So let's go look at the timing model. Over the years, I've built a timing model that on the weekly charts is the key driver, and I'll teach you about what goes in this timing model. But when it's green, and you can see the S&P has been green since November, the NASDAQ turned green this week. The diamonds have been green for a while, as have the Russell. That gives me the dominant buy-sell signal for me in the market. And when I look at the daily charts, it gives me a short-term signal. And you could see that on the short-term basis, we have a lot of days. And the Russell just turned positive, while the NASDAQ, the spider, and the diamonds have been strong for a while. Now you're going to notice this little green line here. That gives me the 13-week new high, new lows. And I know from experience that when I get up to the top here, that the markets typically start to pull back or go sideways. So I could see here that although we're getting extended, there's still little room to run in the markets. Now, during the day, I want to have a signal of what's working and what's not working. So we built the performance view, and this performance view gives me a ability to look at what's working at a 1, 5, 20, or 50-day period of time. And you could see the S&P sectors are listed here. And you could see financials, industrials had the biggest move on Friday. And then down here, you could look at 41 different themes that I like to look at. And if you have themes that we're not capturing to give you a sense of what's working in the market, let us know. We can add those. We can look at the index performance from the prior close, how big the range was in a percentage of the price, and then where did we finish? So you can see on Friday, I'm doing this over the weekend, that we finished near the highs of the day, and then we could get a sense of the new high, new lows. Bull markets are built on new highs, and seeing the new highs on Friday is a positive thing. I'll teach you over time about the buckets, but it's another way of looking at extension, and we're looking at the NYSE, the NASDAQ, the Russell, and the S&P 1500. And we're looking at 3 time frames. The outside bar represent a week ago. The inside bar, the white bar, 1 day ago, and the red and the green today. And what we're basically doing is looking at the percent B of every stock in the indexes. When you're above 100, it means you're above the Bollinger Bands. When you are below 100, you are below the Bollinger Bands. When you start to see a lot of stocks building up above or below the Bollinger Bands, it gives you a sense that the market's going to reverse. Right now, we're pretty neutral. And then we have a number of breadth tools. Some of these, or many of these, I learned from Ian, who I mentioned earlier. And we look at these on the NYSE and on the NASDAQ. And again, they give us a sense of to be long or short the market. We have what's called ratio charts, which compares, it's a relative strength tool, comparing the individual S&P sectors versus the spider. And you're looking for things like this in industrials where you're pointing up to the top, and that's where the strength of the market is. You could see financials had a big move. And, we can see that discretionary has medium, healthcare has been weak, staples have been weak, real estate have been weak, the things you'd expect to be weak in a strong stock market. And then the last place is as you start to put the stocks into your watch list, you'll be able to look at them in the book view. Let's see if this is enabled. We've been working on this, so it might not be enabled today. Yep, here it is. And this gives you the chance to look at a daily on the left and a weekly chart. And I really like this Granger pattern because we're breaking out not just on the daily, but on the daily here, but on the weekly as well. And APPS, which looks fantastic here, except I think APPS is a much cheaper stock, so I'll have to go back and review this. Looks great on the daily and the weekly. So let's go to the JAS layout, and let's pull up APPS, because it looks like that one looked a little funny. Yeah, that's what I expect to see on the price. Digital Turbine. And you could see a nice breakout here, but it's a $3.50 stock. So we still got a little bit of tweaking to do, but I think what we have here is one of the best products in the market that will give you a objective, non-reprinting. So once it gives a signal, the signal stays there on the markets. Tools to look at levels of extension, the leading industry groups and sectors, and then how to drill down on the stocks. And I just want to show you the drill down back on my JAS list. Top down is both the market, which we showed you, but watch what happens here. So I've got my 3,300 stocks. I flip to top down, and it now divides them into the 11 S&P sectors. Obviously more than 500 stocks because we built them from the JAS list. The JF are three different time frames of momentum. If I'm looking at the shortest term momentum, the thing that's working now are financial services. So I click on financial services and it brings up all the different groups in financial services. Let's go for the short term, what's working now. And you could see capital markets, diversified, and regional banks. Here you see everything in this group. There's 420 stocks. So I can look at them by short-term momentum and see up at the top is BlackRock. Now BlackRock, they seem to own everything. And when BlackRock is happy, the world's happy. And you can see it's in a huge run, had a huge day on Friday. But one of the ones that I really liked was Bank of America, which is sitting down here. And Bank of America, pullback, breakout, dots lining up. So the point here is not only do you look at a big list, you can ferret them down into sectors and then look at the industry groups. And then when you click on an industry group, or let's click on the top 3. So only the stocks from the top 3 are here, and I can look at them by short-term momentum. I can look at who's got the most up dots. Cubis Bank, Customers Bancorp. This is a regional bank, kind of low in the pattern for my taste. FFIC, Flushing Financial. Uptrend, pullback, breakout, that looks interesting. And I could run through the list. So hope you're getting a sense of the power that we've built into Market MRI Pro. And remember, there's no data updating. It's done automatically for you. It's updated during the day in a near real-time fashion. And I will be following up with a series of videos to support the various features and teach you the indicators that make up the chart here on the left. Hope you enjoy this.